What if I told you that silver, gold, semiconductors, and defense stocks aren't moving randomly? They all connected to one massive global power shift happening right now. While most investors are distracted by headlines, a quiet war is being waged over the resources that power our entire modern world. And the US? They're scrambling. In the next few minutes, I'm breaking down exactly who controls these critical assets, why your dollar is losing value faster than you think, and the 4 strategic positions I'm taking to grow wealth during this chaos. Make sure you hit that like button and subscribe. Let's get it. Here's what nobody is telling you. The US dollar lost 10% of its value last year. When people hear weak dollar, they think it's abstract. It's not. A weak dollar means your money buys less, period. Food costs more. Gas costs more. Electronics, travel, rent, everything rises because most goods are priced globally. This is why keeping cash in a regular savings account is financial suicide. You're not just earning nothing, you're guaranteed to lose purchasing power daily. The number stays the same, but what it buys shrinks. But here's the flip side. When the dollar weakens, assets inflate. Stocks rise. Commodities surge. Precious metals shine. Why? Because nobody wants to hold depreciating cash. Money flows into gold, real estate, emerging markets, anything that holds value. A weak dollar doesn't destroy wealth. It redistributes it from savers to asset owners. This brings me to position number 1, gold. Gold isn't betting against America. It's betting against uncertainty. And right now, uncertainty is the dominant force in global markets. Central banks bought over 1,000 tons of gold last year. They don't get emotional. They don't chase trends. They protect systems. Why gold? Because it doesn't report to any country. It can't be frozen, seized, or diluted. Every fiat currency is someone's liability. Gold is no one's liability. It's pure asset. Historically, gold returns 6 to 12% annually. Last year, it returned 70%. This year, it's already up double digits. That's not normal, and it's screaming that something fundamental is broken in the system. Here's my 3-tier gold strategy. Tier 1, simple exposure, GLD or IAU. These track gold prices directly. No drama, no leverage. Tier 2, amplified returns. Miners like GDX or GDXJ. When gold rises 10%, miners can jump 30 to 40% due to operating leverage. Tier 3, quality producer. Newmont, NEM. They're the world's largest gold miner with exposure to gold, silver, and copper. This isn't one-dimensional. It's a powerhouse positioned for multiple metal surges. Now here's where it gets interesting. Japan is the most indebted developed nation, 250% debt to GDP. They owe $2.50 for every dollar they make. 4 decades, they survived with 0 interest rates. But their bond yields are rising, and that breaks the entire system. Here's why you should care. Japan is one of the largest holders of US debt. When Japan's system cracks, they sell US bonds to protect themselves. That pushes US yields higher and destabilizes our bond market. This is why the US stepped in to stabilize the yen, not out of generosity, but self-preservation. There's $20 trillion connected to Japan's carry trade. When this unwinds, hedge funds don't just sell one thing. They sell everything and rush to cash, then precious metals. This reinforces why gold and silver are critical right now. While everyone's distracted, China is quietly positioning itself to control the future. Here's their 3-part strategy. Part 1, rare earths. China controls 80 to 90% of rare earth processing. These 17 metals power EVs, missiles, satellites, AI, and data centers. Even countries that mine them must send them to China for refinement. That's leverage. This is why the US invested $1.6 billion into USA rare earth and heavily backed MP Materials. MP owns Mountain Pass, the only large-scale rare earth mine in America. They're building vertical integration, mining, processing, and magnet manufacturing. The Pentagon can't rely on China to supply weapons technology.
Part 2, Silver. China is paying $6 to $8 above market price for silver right now. Why? Because silver powers AI EVs, solar panels, and weapons systems. As of January 1st, China put silver on their restricted export list alongside rare earths. China controls 70% of silver supply and uses more silver than anyone else. They're stockpiling hard. Supply is tight because most silver is a byproduct of other mining. It doesn't scale easily. New mines take 10 years to develop, but demand isn't waiting. This is why I'm positioned in SLV, SILVR, and SIL. Part 3, the trump card, Taiwan. Over 80% of advanced chips come from Taiwan, mostly from TSMC. If China takes Taiwan, they control advanced computing globally. Apple, Nvidia, AMD, they all depend on TSMC. You can't replicate 75% of the world's cutting-edge chip production overnight. If China controls silver, rare earth processing, and Taiwan, game over. They become the most dominant power on Earth. Based on everything I've shown you, here are the 4 areas I'm positioned in. 1. Gold and gold miners, GLD, IAU, GDX. NEM, the ultimate hedge against currency, chaos. 2. Silver SLV, SILVR, SIL, critical input with supply squeeze incoming. 3. Rare earth processors, MP materials, USA, rare earth America's sovereignty play. 4. Defense and semiconductors TSMC, because America won't go down without a fight. These aren't random stocks. These are strategic assets in a global power realignment. Listen, you can keep chasing the next Tesla or Nvidia, or you can position yourself in the assets that make those companies possible. Gold, silver, rare earths, chips, defense. That's where the real power is. Build wealth one share at a time. I'll see you in the trap. Salute.